Welcome back, ladies and gents. It's about that time of day again here, folks. Monday through Friday, 7:30 a.m. Eastern Time. We go from the screen here in Los Angeles to the trading floor in New York City. Welcome to our crude oil morning prep. My name is Joseph James. I've got my partner in crime. His name is Marty Errico, right along with me here today. He'll be broadcasting live from the NYMEX exchange this morning. Check him out at tradersaudio.com. They offer a live broadcast directly from the NYMEX exchange. And, of course, don't forget about myself. My name is JJ. Call me Joe. Call me JJ. You can come see me at SchoolOfTrade.com. 8 a.m. Eastern Time. We open up our live trade room with members from around the world. We offer a free trial over on the website. Check it out. You will not be disappointed. One of the best trials available online. Check it out, SchoolOfTrade.com. Moving forward here, the plan today is pretty simple. I'm going to start here with the screens here in Los Angeles. I've got my computer all warmed up. I've got some charts loaded. I'm a technical analyst, which means I'm not going to worry too much about the fundamentals, although there will be some fundamentals we talk about here early in the session today. I'm going to focus on a top-down technical approach, which means I'm going to start with a slower time frame and move my way down to a faster time frame. I'm going to analyze what's happening overnight. Specifically, I'm trading the U.S. morning session, so I'm focused on what's coming out of London, right? What's happened out of the London trading session, right? That was it's the previous session to the U.S. morning session. If I can figure out what's happened over the past few days, down to the past few hours, and then knowing what we have to work with this morning, I can usually anticipate the direction at the open pretty darn well. And if I can anticipate direction, I can use support and resistance to find those high percentage trading opportunities starting at 8 a.m. Eastern Time. Now, once I'm done going from slow time frame to fast time frame, finding those trading opportunities for you guys on my charts, I'm going to toss it all the way across the country from Los Angeles to New York City. We're heading to the NYMEX exchange, where we're going to listen in to see what Marty Errico from the pit has to see. Now, Marty's got a very difficult job. His job is to brave the elements every day, go down and fight his way onto that crazy trading floor. Remember, guys, the NYMEX trading pit is one of the most active in the world. Besides the S&P trading floor, right? Boy, there's nothing else really that's more active than the crude oil pit. So we know it's going to be important. We know that Marty's down there pushing and shoving, getting himself in a position to give us the finger on the pulse of what's happening this morning. In all reality, we can do all the technical analysis that we want, but if the market participants are reacting differently, we need to be aware of that, and that's where Marty's going to come in this morning. Very important to listen in closely to when he goes over market direction, intermarket divergence, market internals, option prices, and of course those always important pit session trading levels. Now pay close attention to the intermarket divergence, looking at crude oil, RBOB gasoline, heating oil, and Brent crude. And then don't forget to write down those pit session trading levels. They're going to be different than the ones that I use on my electronic trading session levels, right? Remember, there's a difference between electronic trading hours and regular trading hours, and Marty will be talking about those pit session trading levels here shortly this morning. All righty, enough flapping the gums, JJ. Let's grab some charts. Let's get this day kicked off with a bang here. Happy Monday. Now, today is the first Monday after non-farm payrolls. Now, I know last Friday was a lifetime ago, but think real quick, think back to last Friday. What happened last Friday? Non-farm payrolls were what? A big disappointment. Why was that important? Because we're listening in for Fed speak about Fed tapering. Why is Fed tapering important? Well, because it's affecting gold, it's affecting the dollar, it's affecting everything right now. We have an FOMC meeting on September 17th. Okay, check out any major news website and you'll see September 17th, that's our next FOMC meeting, and we have a very strong likelihood that in that FOMC meeting we're going to hear something definitive about Fed tapering. Even after the lackluster jobs report last Friday, we heard from PIMCO's Bill Gross, we heard from many Fed speakers that all confirmed that they did not see tapering being affected by that lackluster report on Friday. So apparently, if you read between those lines, the experts out there are telling us, no, even though it was a disappointment, not to worry, it is still in line for slow but surely economic growth. Remember, that's what they've been shooting for. They didn't want to just go through the roof. So basically, this confirms this slow, moderate, calculated economic growth here in the U.S. And, of course, that's just the U.S. We heard this morning, as we came out this morning, checking out the focus points this morning, We now have the Eurozone, the first positive tick up in 2 years. Guys, this is huge. Now, I don't know about you guys, but I distinctly remember when we sat here and said, "Oh no, the U.S. got kicked in the you know what, right? They're down. Eurozone got kicked in the pants as well. They're now down." Remember when the soap opera first began in the Euro? Remember how we were wondering, when is this mess going to come out of it? Well, welcome to the party, folks. The music just turned on. The keg's been tapped for a couple hours now, and the band's warmed up. I think this economic recovery party is just about to go into full swing. Australia elected its new prime minister. Congratulations to our good friends in Tokyo, Japan. Got the 2020 Summer Olympics. That's huge for Asia. I'm telling you guys, this global economy is starting to look like a freight train headed to new highs. News from China was positive, specifically the exports. Now think about why the exports in China will be positive. Because China supplies the whole world. They export to the whole world, not just the U.S. and Europe, right? But Australia, other emerging markets, right? We know that when China is exporting, that means other emerging markets, their economies are getting stronger, right? Take for example, let's say you live on a small island in the middle of the Pacific, and you're now purchasing products from China because your economy is back on track. You wouldn't be buying those products, right, if you couldn't afford it. President Obama has a very highly anticipated recorded interview that'll be on 6 different news networks here in the U.S. as he attempts to continue to rally support against Syria. This is really surprising to me personally. Can't quite tell why he's pushing this envelope so hard. Some people think it's because of oil. Some people think he's trying to cover up all the Benghazi, all the other issues that have been coming up, right? All the other scandals that have been plaguing the U.S. in 2013, right? Some people think it's a power grab. Some people think it's over oil. Some people think, of course, it's just to cover up some of the recent scandals. Tough to tell. Everybody will be watching closely, you have to imagine. Now, we heard from the Secretary of State, John Kerry, who, by the way, was the one who rallied against the war in Vietnam, by the way. And Secretary of State John Kerry said, "We are not going to war. There is no military solution, only a political solution." He said that yesterday afternoon in an interview. So while the president is rallying for military support, it sounds like the Secretary of State here, Mr. John Kerry, is saying we are not going to war. Again, mixed signals here coming out ahead of this recorded interview regarding Syria later on today. Will be very interesting. We are most likely going to continue to see this Syrian conflict take center stage this week, mostly because we're in between the FOMC report and the jobless numbers, so there's not much else to talk about. So you're probably going to hear that come in center stage this week, right, on the news media, which I do not recommend you watch very much news media to begin with. U.S. Congress comes back from their holiday recess. If you recall last week, we kept referring to the fact that the Congress, of course, because of the Labor Day holiday, was on a break, right? Very nice of us, by the way, to give our Congress such a great vacation every summer. I don't know many citizens that work hard to get vacation, but the bottom line is they're back from their holiday recess, and again, we will be seeing a lot of reaction coming out of Congress, coming out of the White House regarding the Syrian conflict. News important about gold. The gold miners' strike in South Africa has come to an end. You can use any of these hyperlinks to learn more about any of these important news events that were talked about here this morning. If you get any gold traders out there, definitely want to be aware that gold miners' strike will have an impact on supply and demand aspects of commodity futures. Now that you know what the focus points are this morning, let's move forward here looking at today's news. We have a very barren economic calendar here this morning. We don't have a lot on the news. Usually the Monday after non-farm payrolls is all reaction. So this morning, the big ticket here is reaction to the non-farm payroll report last Friday. I don't think we're going to get much about Syria here first thing this morning, but you can bet your bottom dollar we're going to see some traders coming in this morning that are going to pick up that newspaper from Friday and say, "Oh, I didn't know this is what happened with non-farm payrolls," and they're going to react accordingly. Be aware today is Monday, the second week of September. We know the month of September is always an exciting month. I think to be one of the best months of the year. September, October, November, and December, the best time of the year to be a trader. The second week of the month oftentimes is a little bit of a sleepy week. The first week of the month, we get non-farm payrolls. Second week of the month, as you can see, we don't have a lot of news on this calendar here. So a little bit of a sleepy week here before we run into that Friday the 13th. And of course, today being a Monday, Mondays always tell us to be very patient as we get started this morning because, again, just like you and I would have paid a couple $1,000 to get that weekend a couple hours longer, right? I'll bet Marty's the same way. I'd cut a pretty big fat check on Sunday night to keep the weekend going, right? So would you. So nobody likes to begin their week. Nobody likes to get back to work right after a great September weekend. And so we know that Mondays are going to be very similar, right? People are going to be slow to get back. As they come back, of course, they see there's no major news, right? You know how it goes. Traders look at the calendar. Oh, there's no major news. It's like knowing your teacher is going to be absent the next morning. You're going to show up 10 minutes late. You are, right? It's human nature. So be patient this morning. The teacher's not going to be here today, right? No major news. So we do have just a little bit. We got John Williams speaking here at 11 o'clock. You know he'll be talking about Fed tapering. You know he'll be talking about the economic news coming out of Europe. You know he'll be talking about important stuff here today. Consumer credit at 3 o'clock. It's a very, very minor news report. Not worried about 3 o'clock news. The most important thing we see today is the lack of news on a Monday morning. That tells me to be very, very careful. I'm going to be suspicious of price action as I first get started today. I'm going to be very suspicious of new higher highs and lower lows, and I'm going to err on the side of caution this morning as we have a Monday morning without any major news. Now that we've gone over the plan today, now that you know what the schedule looks like this morning, now that you know what the focus points are, what's actually moving these markets, now we open up some charts. Because in all reality, the patterns are the most important thing. We can understand every single news event. I can be the resident economist, right? I can know everything about how the fundamentals are playing out, but in my humble opinion, the technicals lead everything. Let's now take a look at what's happening overnight, specifically what's happening out of London. We see some very big clues here. First of all, we're trading inside the range from Friday's price action, right? Non-farm payrolls number on Friday. That was, of course, where we got this big range on Friday. As you know, inside day tells me bullish and bearish. Both sides apply. I can buy at support. I can sell at resistance. There is no directional trend. There is no directional trend when I am inside the range from yesterday. That tells me I'm not just committing to buying pullbacks. I'm not just committed to selling retracements. I'm going to be open-minded to both sides of the coin today, buying and selling. The second clue we get is look at this very narrow range coming out of London. Now, is anybody out there paying attention the past few weeks? If you have, you know that we talk about the fact that crude oil usually makes a $1 move coming out of London. What do we have here? I got just shy of 70 cents. I get 67 cents there coming out of London. So first of all, we're trading inside the range, which opens us up to both buying and selling. Keep your eyes open, right? Keep your options open. We know that we get a narrow range coming out of London. That narrow range coming out of London tells us that we should also expect a little bit of sideways range, some narrow consolidated price action as we open up the day today. This is very important. Now, this, of course, can change because you can see we had about a 70-cent range on Friday, but look what happened. Big trading range by the end of the day. Now, that, of course, was because of non-farm payrolls. So it's not guaranteed, but we definitely know that when there's a narrow range coming out of London, that tells us one thing for sure, and that is traders are waiting to react to something. What that something is, we, of course, don't know quite yet, right? As day traders, we don't try to predict. We try to react. We'll be watching closely for when this price action does begin to pick its directional trend, and, of course, we'll trade in that direction. We've got 2 previous days of bullish. This indicator package will mark up the previous ranges, color code them green. As you can see, we have been rising over the past 2 sessions. That does mean, though, that we are due for a pullback here, and it does look like we are just inches away here from closing below the VIP chart cloud, and we'll be able to start looking for prices moving lower. As I move forward here, now that we've analyzed what's happened over the past few hours, let's move back in time here a little bit and look at what's happened here leading up to the past few hours. I've got my anchor chart number 1, my slowest of all my time frames. Notice how this is a tick chart. The previous chart was a time chart. A very different look from tick to time when it comes to your chart time frames. Now we move into our anchor chart number 1. We see the long-term trend is bullish. Very easy to see this long-term trend moving higher. Long-term trend is important to remember. We are intraday traders, so we are focused on the short-term trend, which we'll get to in just a moment. what this tells me is that I cannot, unfortunately, I cannot use this trend channel, right, the directional clue, I cannot use that to basically just look for buys today. That doesn't give me a short-term directional bias. What it does tell me, though, is that if I can, buying will be the higher percentage trade. It does not mean, though, that I cannot sell short with some very good effectiveness. The most important thing I see on this chart is resistance here at 110.52. That's very important because you can see here we have reacted to that resistance. Now, remember, if you're a brand new trader, remember this very simple but very important fact. Support and resistance is nothing more than where we expect traders to react. When a trader reacts, or when the market participants react to that level of resistance in this case, it validates the resistance level and it activates the typical supply and demand that comes in a liquid market. So what happens is when we hit resistance, that demand now has been overcome by the supply. Now the supply is in charge. It will keep rotating down to where the next demand level comes in, which will be at 107.46. So with this said, we do expect price will try now to move to 107.46, again, because it tested the major resistance, and you can see it reacted very well off of it. We have just one thing to be concerned about, though, right now, and that is the 109.66. 109.66 is the cloud down to the 109.32. That's really the only thing standing in my way right now is this anchor chart cloud, 109.66, 109.32. Get me below 109.32, and we look great here to start aggressively selling short. Moving forward now from the 5400 tick chart over now to the 1800, we now have a little bit faster time frame. This now gives us a lot more information. Remember, it was 109.32. 109.32 was the anchor support. And so we know that 109.32, that will be the line in the sand. We'll wait now to get below the 109.32, and you can see that opens things right up to 108.22. 108.22 makes for an easy profit target on the way lower. 107.46, 105.60. These are areas where I will be looking to take profit for a short. Take profit at 108.82. If you need to re-enter or hold a runner down to 107.46. Remember, whenever we hit these support levels, I will be open-minded to a reversal and then a buying opportunity. I'm not going to predict it. I'm going to take my profit at support. I'm going to wait to see the reaction at support. Once we start going higher, bam, find those patterns and enter your trade in the direction. Remember, we do have a long-term trend that is bullish on the anchor chart number 1, so we can still see some effectiveness in buying here as we bounce off any of these support levels. Keep in mind, 109.32, that's my line in the sand right now. So we get a little bit of support here to worry about. Selling short until we get below that 109.32 will be higher risk. You can see here, though, that crude's going to have a little bit of trouble here. We got 110.52 overhead, 109.32 below. Can you spell sideways trading range? I could easily see us going sideways here before we open up the day here at 9 o'clock with Marty in the NYMEX exchange. Speaking of Marty, I think it's about time here we go check him out. I've been keeping him waiting here for so long as we talked about all this important news coming out this morning. So what I'm seeing right now is a narrow range coming out of London. I'm seeing a long-term bullish trend. But in the short term here, I'm seeing, well, I got 109.32 support, 110.52 resistance. I'm thinking ahead of this first Monday after the weekend or after non-farm payrolls, I'm thinking we might get some sideways ranges this morning. But let's listen in to see what Marty's seeing on the pit. Because, you know, at the end of the day here, guys, it's all about what the market personality is coming from that trading floor. So let's listen in to see what Marty's got going on today from the NYMEX exchange. Marty, welcome aboard. Happy Monday to you. Great to have you back. What's the overall sentiment out there on the floor today? How are we doing?
Good. How are you, JJ? Excellent. So, all right, before I get my screens up, let me just kind of talk about the situation that we're in. Well, we touched on it just a little bit with JJ, but remember, you know, it was kind of a waiting game in the next couple of days. We're kind of waiting and seeing and waiting to hear what we're going to see from the president, I should say, right? As JJ did mention, he is going on a media rampage, 6 different sit-down interviews, and then a big primetime speech tomorrow at 9 o'clock at night. and it's going to be aired all over the place. So, you know, he's being his own advocate to try to rally himself and rally, you know, the support of this missile attack. So if it doesn't happen, it's going to be a big beatdown. And so far, to me, across the board, as I look at all these polls that are coming out of the Wall Street Journals, Reuters, Politico, right now it looks like they're not too much in favor of voting for that missile attack. And personally, just from looking at a poll from Politico, 80,000 people were asked. 90% said no, they don't want to see a missile attack or a war or whatever. But this isn't a war; it's a missile attack. But you know, let's see what the Congress does. The vote is scheduled for September 12th. That's when the vote is actually scheduled for. So these next 2 days, you're going to see the president. Next couple days, president definitely hyping this thing up and giving his side of the story. So on crude, you can see that we're trading right now within a little bit of a bullish channel. I screwed up. I don't know why. This is so weird looking, but yeah, we're in a little bit of a bullish channel here, right? And right now, the key is to open up above basically 110. If we can open up above 110 today, I think we can see some more volatility, some more follow through to the upside. Of course, geopolitically speaking, we're going to be watching any type of news that will move the market out of Syria. But again, I think there's going to be, I was talking to somebody yesterday, it's going to be a little bit more noise opposed to news today. So don't get confused and don't trade the noise. We want to trade the actual reaction of the news that comes out. So there's going to be a lot of noise, a lot of things coming across the news wires. You don't have to jump on every single one of them. But we are just going to watch this trade within this overall range, right? If we happen to drop below the 109.5, that's where we will start to kind of see a possible turnaround. But other than that, we are going to be looking for a little bit of a bullish trend to try to at least get back up to 110.5 and possibly even target that higher end, right, 112 and at 114. So guys, so far in the pit, you can see that we just have a little bit of resistance up above here on our larger time frames, right? We have 110.70, which could be a nice target. We have 112.24. In the pit, they show a lot of interest in the 110 call, right? We're talking October front month 110, October 112, October 114, and Novi 115s. So there's a lot of interest here in the upside. Larger locals, larger paper institutional traders, they definitely hedge to the upside. But again, they always have their insurance on, and they have a few puts that were really cheap that they bought on. I noticed on Friday just them coming into a little bit of a put position, but just buying the cheap puts just for the hell of it. But they are pretty much long-sided. They are all long-sided. So my guess is that we're going to maybe make a run up towards 112 here. Again, trade within this range. If we happen to get below 109, 109.5, that's where we're going to see a little bit of some chop sideways trade. Above 109.5, above 110, we open up this pit session today. We could see a nice highs from at least Friday. Okay, real quickly, natural gas as well. We're in this wedge, right, of natural gas, and we're in this wedge for natural gas, right, and we're looking for at least a 50% retrace, 50% retrace of the big fall down from the last couple days. So our target's up at 362 even. So again, we're coming in and we're buying the low of the wedge to get a 50% pullback, right, at least to 360, 362. 360 is my first one. 362 is my second target, and we could possibly look to sell back down after we bounce off. So today we're going to try to work our way up to 360 in the natural gas, right? Pretty simple. Taking a look at your dollar as well and the rest of your commodity currencies across the board. Again, I saw your crude, I saw your RBOB, your heating oil, right? They're all just trading kind of sideways right now. RBOB last print up on the board here in the OC contract. 282.67, right? Just catching a little bit off, but coming off support. It's running into support just like the crude is today, right? Crude right now is, right, coming off of the highs of the overnight session, running into some support here, and now you can see we're rising. So we're seeing fitting image charts on the crude and on the heating oil and the RBOB. RBOB has been lagging just a bit, so it's really been the crude heating oil strength, right? But RBOB's just been lagging just a bit. Currently trades in 282.80, right? Heating oil 314. Brent crude 114.45. We're going to be rolling on over into the November contract within the next day on the Brent crude, right? As we're going to be coming into the October expiration. Brent WTI spread right now 440 on the spread. Very bullish for crude right now. So that's why I think that we could rally up to that 107.70 because we're looking very bullish on the Brent WTI spread. It's in contingency by about $1.20 today, so very significant there for bullish activity. I'd be buying the lows of the range in the channel, right? Buying the 109.50. Okay, so we took a look at some of our suspects. again, as we mentioned, the dollar, we've been having that risk on sentiment kind of come back into play. The dollar just slightly lower today by only 10, 12 points, 82, 10.5. And of course, we're also going to take a look at our levels real quickly here. So here are your levels for today, right? Today's October, Jesus. Today's September 9th, 2013. And we're going to take a look at some levels here from yesterday, Friday's pit session. The high was up at 110.70. The low was at 109.24. Closing settlement number was at 110.55. 110.15 is going to be your daily pivot today, which we are kind of trading close to at least, right? We're close to that 110.15. Resistance up above at 111.06, 111.61, and 113.07. Support down below at 109.60, 108.89, and 107.23. Remember, guys, volatility still on the bid. Very impressed how we watch this market explode to the upside with volatility. So that's something that you definitely want to keep an eye on today. Volatility, the implied volatility index is about 30%, OVX 28.5. You also want to be watching that settlement number from yesterday, along with those strike levels above, as I was talking about, the 110, 112, 114 call, with also the Novi 115s in play. And these are the put side activity. A little bit in the 107, mainly 105, half 102, right? Nothing too big. Natural gas, pit session high 371.90. The low is at 357 even, right? Closing settlement number here was at 357.70, right? So we're coming off the low prints here with your daily pivot. These are short-term levels of support and resistance. These are longer-term levels of support and resistance, as you can see here and here, right? And then just overall resistance up there. I'm personally looking for 362 today. 362 is going to be my level I'm really watching for. Again, that's 362. And then 360 even are two levels that I think that we can get up to, buying the lows, right, on the natural gas, buying the lows and popping up 50% retrace from the high to low, right? There it is right here, 362. But at least 360 even, you know, some reasonable support here. And we're going to look for a break up above 357.5 and rock and roll on up there. So that's what we're looking for in the crude and the natural gas, both kind of buying opportunities, right? We're going to be looking for buying opportunities with higher risk scenarios in play. Remember, all this geopolitical news that's happening, but bottom line is we're pretty much going to look to try to catch a little bit of a bid. And yes, we could run into this resistance at 110.5, 110.70, but that is going to be overall our target for the morning. But let's see where we open up first and foremost, right? That's going to be our most important variable this morning. So that's really all I got. I'm going to throw it back on over to JJ in Los Angeles. We're getting ready here on a Monday morning down on the NYMEX.
As always, Marty, thank you so much for being here today. And so as well for you guys and gals, thank you so much for coming out and joining us here today as well. Monday through Friday, 7:30 a.m., we go from the screen here in Los Angeles to the trading floor all the way in the NYMEX Exchange in New York City. Thank you, Marty, for being here. Thank you to the whole entire team there at Traders Audio for doing a great job every day. Go over, check out tradersaudio.com. You can listen in to Marty and his partner Jeffrey live at the NYMEX Exchange. They start at 8:50 a.m. Eastern Time, Monday through Friday. And, of course, come out and join me Monday through Friday in my live trade room. It opens up at 8 a.m. Eastern Time right about now. Again, 8 a.m. Eastern Time. And don't forget, we offer a free trial right on the website. Check it out. Guys, if you want an invitation to come see me, email me, jj@schooloftrade.com, marty@tradersaudio.com. Shoot us an email. We'd love to know your feedback. We'd also love to send you an invitation link for tomorrow's broadcast. So don't forget to keep in touch. Send us your feedback. Let us know if you want to attend the live broadcast, and check us out online, guys, over at the Crude Oil Squawk blog. Have yourselves a wonderful day out there. I'm gonna echo what Marty said earlier. I thought that was great the way he put it. It's going to be a lot of noise today, not much news, and you can bet your bottom dollar on that. We're going to hear a lot out of Syria. We're going to hear a lot out of the U.S. We're going to hear a lot about what happened on Friday's non-farm payrolls. It's going to be a lot of opinions hitting the microphone today. So be ready for anything. Sideways slop and chop here in the short term. And again, a Monday without any major news. We know we got to be patient. Come out and see us sometime here in the trade room or on tradersaudio.com's broadcast. We'll catch you guys here tomorrow, Tuesday morning, 7:30 a.m. We got 23 hours and 30 minutes here. We'll see you guys then. Adios, amigos. Bye-bye for now.